Good morning. I'm a little bit later today. Just cut into my finger. But anyway, what happened so far? You see this area around the 28, 27. This is where I thought that we have this pre-market acceptance and value build, and then now we see the long attempts, and now we're going up to the overnight high. We did this the first time with the open, and now trying to get higher prices, but the volume is not very strong. Okay, this is a sign that we are not that right now we are not looking for the long. But if the volume would increase and hold above the overnight high, that this would be a strong sign, because we opened, remember, above the yesterday value high. We kept above yesterday value high with acceptance, and now yesterday value high in this pre-market zone is a bounce level, which one could perceive prices coming back as a range long, and also the 22 yesterday value area high as a range long, with also probability for early extension of the long move. If they now would increase the volume, which they obviously not doing, okay? You see this volume does not increase. But if they would, then we would have a typical open drive situation. As we again have opened above the yesterday value high and see then prices increasing at the overnight high. So only for the theory. What would I do now? Right now, I would look for two things. I want to see some more guys get trapped in the area around here, and then one should go for the short, because this is then a open rejection reverse, which intend to get back even to the 30 to 28 area. It gets high chances. So this would be a really good risk reward from where is the risk reward tool to show you? So if you can enter around the top area and setting the 4 tick stop, that means 2 ticks above the high, as the high must be built now with this attempt on the upside, we then have a good chance that we ran through the complete, I put it here on the side, here, yeah, that it's a good probability. But for this, we will have to see the rejection on the top here. That means I want to see some attempt. Okay, now we build a lot of volume. Okay, now we have a lot of volume. Now let's see if the hypo number 2 plays out. That means acceptance above upper pre-market HVE. Look for long with increasing buying volume at the overnight high and holding. That means now we want to see the holding structure, or if they make higher highs, then a pullback to this level. So this is the area to watch. 44. So now they play a possible open drive. And think of it. If they can't make it higher, and if they fail with some kind of double top, in my case, I would look then for the short, because this would be the open rejection reverse. Or we look in here for the holding structure. If it's not coming, then higher prices, and then pulling back here and find then an entry with some re-long entry. Right now we just watch. Here you see the area where we at right now. This is also the area of the Thursday main distribution, with there some low volume node around the 50 area. But there's of course anyway room to unfold, as the bigger low volume node in the composite profile is not until the 62. Okay, now we see the increase of volume, so that means they're trying to play this long here, and also trying to get in with some, I would say, confidence. And they're still buying here at the top with increasing volume. This is a good sign, of course. So this is what the attempt of the long trend looks like. I tighten my stop now a little bit to the 43. As we're reaching now the area 50. Okay, now they put out everything here, or a lot of positions. I'm still into it because my stop is now tightened at the 43 level, and probability now rises that one gets stopped out if there's no then absorption going on. But to give the market participants the chance and my trade the chance to unfold, I don't tighten my stop now too much, because this is now the area of absorption. I can show you here. See this? I entered here when I said before, here's the increase of volume now starting again, and my stop then was pulled from 42 to 43. And you see now this area here, I want to give the trade the room, because this is the potential absorption area of the long-term trader. And if they are here, which we see that they are here, but we don't know how big they are. This can be only some OTF, it can be more. At this very moment, we just don't know. And as we don't know, I give them the space that the trade can unfold, because there's a lot of acceptance and also now a shift in value. And that's absolutely okay then to wait, because I don't risk very much here in this trade with a 3-tick stop. And on the other side, we may see at least a long continuation with the targets area. Right now we couldn't make it above here this low volume node, but there's still at least the first target, the 54. And now it seems like, and now I got stopped out at this moment, you can see here. That means we have now the rejection. So here you see there was the second attempt, a little weaker volume at this moment. And so then switch in the thinking now, what would be the next thing then to do? As they long obviously failed, we are in the situation of a good risk reward scenario. If they now pulling back a little bit, I will try to get a cheap entry around the 46 area for the short, and also knowing if then they test the high again and it increases the volume huge, that I will enter this short position. But if they just playing around here before then playing the short, that's no reason to get out of it. I've not entered yet because price didn't come back more than 45, which would be obviously not cheap enough for me to enter. That means if they're not coming back now to test at least the 46 level, then I'm just not with this trade. But this is now the kind of open rejection reverse happening a little bit later after trying to take out and making a long continuation, some kind of. All right. Yeah, right. The prices didn't come back. And think of it, this is the scenario I said before. Just watch this white dot through this here. This is the risk reward. This is the reward, which we now have a higher reward after rejection reward. You see that this streak I measured, which I thinking now of, this is a possible trend. This is the possible reward for the short trend. Short trade that I didn't get because prices didn't pull back. That's the problem, by the way, when you're in a play like mine and then have to switch to the short play. If you haven't been into the trade and you only waited for the rejection, so for the short trade, that you could have gotten in as the moment when I got stopped out, maybe around here. In my case, it was not so easy because my brain is only right now at the level that it can participate on trade in one direction, then stay calm and need some seconds before make the transition if there is a, I call this transition trade probability, okay, to then switch in the other direction, for me that's too fast. Yeah, that's it. And one have got in after seeing this in this moment here that they split out everything, the whole longs, to get in then fast. But I always need some time, and then normally I wanna see first the pullback, which obviously haven't happened in this case. That means then that you don't get a trade. Alright, now they filling out, repairing this leg a little bit here of volume, and also now the POCs following the price to the downside, more rangy character within this whole sector, within this scenario, in between the overnights, low and high. So nothing to do right now. The next activity level would be if prices then coming back to this area and seeing rejection, we can look for the long, for the range long, above still yesterday value area high. And the other thing is what to look if they now already stabilize, and we see then here this bearish imbalance here. You see this profile with the POC, and then here the bearish imbalance, which obviously it's appearing here. And then we would look then if the price is coming back here again. In this case, as we have seen that the high isn't already here confirmed as possible first range short entry level. In between, nothing to do. I will do my analysis from my before trade now. Alright, you see now the short-term picture is we are still in this distribution, and now we're coming to the range high volume edge level at the 47. Now look for responsive selling for this double rejection to then go here with a good risk reward for the range short and wait. Okay, this is too early now. I'm not gonna look here for the short because you see the whole structure went up to 50 and the high volume edge here at the 47, 48. So that means that I would have to get into this trade at least at 46. I need prices around 46 for a good risk reward. Okay? And that's a little bit then the thing on a day where the range is really tight and then even not get it and made some tests around here to find an entry. I'm not gonna do the same thing then here because you have to understand the impact on your risk reward. If you then now entering here at 43, you only have a 4 tick reward. And the other side, you would need to have a 1, 2, 3, 4, 5, 6 tick risk. And you need to take on this risk then to still talk of an ongoing alive scenario for the range short. And watch yourself. It's a high probability that much of your losers trade may come from this emotional forcing of trades when waiting for a setup to appear and then not happening the way you want to see it, but want to go and take this trade and be undisciplined. And you have to watch just your emotions. That's why I always tell you, the most important thing is to have some psychological program and then go and make progress really then in trading. And first thing you can start without signed into some psychological program. By the way, we at Manapa also thinking of implement some psychological program within the next month, couple of months, but we're not right now ready for this because you need people and you need some you need some people, experienced people and we will see. But the first exercise you can do is always make an awareness check of your physical sensations, emotions, and thoughts. Now you see right now the material that got sold, okay, in this move from the top down here had no impact on price because prices were bought at the POC already again. That means that there's some guys maybe a little bit more money in the pocket than this ultra short-term traders, that's a sign that they collect those short pieces people bought into the POC. That means now people short and also people long. And it's a high probability right now that the people now closing their shorts once the price will make it again here to this micro high, and then you see some poop, some plop. That means that the long people who buy it actively then were successful. And it's possible that if they're a little bit bigger, then they just trying to fish some stops to become liquidity for their shorts then. Alright? And the other thing, just want you to think of why should this happen, why those guys do it. It doesn't matter why, because there are different participants. Everybody is having their own analysis and trying to participate on one game, but with different strategies. And the other thing would be, why should people, when people trying to play the range short, already start at the POC collecting their short pieces for longs? What would be the other thing? Okay, of course, the other thing would that people trying, who are really big, get into more pieces for the long trend. So right now both things could happen, but important to know that just now the books are a little bit on both sides imbalance, as people passively bought and the other who sold into are forced to give up, to let loose from the shorts. For me, the scenario hasn't changed. That means if we see the attempts on the long side and some stops flying and then rejection, that's the moment, boom, boom, where you're trying to get in then into a short. If no rejection and just tumbling around, then beware. Then I will not look for the short, because then we will see the sign that people really trying now to get higher and get into the long trend. Right? You see that? You see that people selling like hell. Look at the delta. We even broke the delta structure from the cash. People selling like hell, but yet price not following. All right, so we see still the holding above the POC. That means still people collecting those shorts. That means they are passive buyers, people who buy passively. The one that play in the range short got absorbed. The one who play in the range short got absorbed. No coming below the POC. This is a at the moment sign of strength of the bulls. All right? This is just reading the order book. So I will beware now looking again for a short, because obviously it's no problem for the people here to collect those shorts. That means they have a bigger pocket than I have. I'm not gonna stay against them. I'm not gonna trade this, because this is not what a textbook range delta would look like. So then I wait, and you see also people now waiting, because they recognize as well 1, 2, 3 dots here printed in the chart, not even a move for 1.5 minutes, as people not buying or selling right now, as they see that we are a little bit stuck in between the 48 and 43. So you wait either to break out or to the other side and get back to some normal behavior. Yeah, nothing is happening. Still people doing nothing. And you see also here the decrease in volume. See that? Means that the attempts on both sides are slowing down. Volume a little bit drying up. It's 9:44 now. There are no numbers. I mean, no economic numbers. And if there are also no news events or something, nothing has happened. There's a chance then that now at 10 o'clock around and later that there will maybe coming more volume in. As normally the morning meetings of the funds about to end, and that mean that they then may invest some money and starting to work their orders. But right now, if you see, it's not much going on.
Fund Fund manager.
So maybe some fund managers coming in after 10, but this is not, they have to be a must have. Okay, still people selling. It means some people bought now and they then didn't get price really higher, and now they, maybe some of them here, you see this was just the closing of this longs in the micro level. But oh, that's just nothing to do right now. Okay, now we see some changing. People bought about 1, 3, 1, 2, yeah, 7, 800 pieces at the top area. That means the passive buyer now switching to active buying. And now what I want to see is a holding above this 47 area. A holding, and then it's again the area where one can look if there is value built or we make a new high bouncing back and stay above. That's the pullback level where one could look then for the trend long continuation. But beware of the signs. That means pulling back, increase of volume, or up prices here, pulling back and holding structure, or means going higher right here and just build now starting and holding structure with acceptance and shift about the value, about to shift the value. If this is not happening, then it's just a trap for the short term and retail buyers. Here in footprint, this was the moment I told you here, where about 1,000 contracts were bought into the high of the day. And now we want to see here above this 49 area where most of the at the moment volume was produced. We want to see here the holding. If you're not seeing holding, don't enter, please. If we see the price rising and strong with volume increasing and then pulling back, then this will be the level where we'll look for the entry. Okay, these are the two strong signs I will see. These are my triggers combined with the big picture, because big picture told me that here is the area where we want to go above from the pre-market, the overnight high, and then we want to see the pullback here to make the first target about the 62 area. That means work up this whole distribution here and then make it up to the 62 area. But we need to see the strength, that you're not going a second time or going for a long trend trade with a expensive then entry without seeing the signs of acceptance. The other thing what you could look for would be that they try to make it up here again. And you see this already with a lower volume, and then see the rejection. and then one could try to get into the 49, 48 area, which would be like very cheap, to work then the short trade with a target to the at the moment cash lower high volume edge at the 38. All right. But this is the other thing. We need to see the rejection first and not just playing it and feeling that lucky if you get a winner, or feeling this would be then a lousy trade. This would be a trade without the trigger. Would it be a trade that you cannot measure. All right. And if there is no trade, and so what? Market didn't give you a trade then. That's okay, because we don't do lousy trades, we only do lucrative trades. That's the thing you can control. And now we also have some better landmarks. Means that the profile is getting clearer now, the daily. Okay? It's more getting a ranged character. Means now if the market is giving us a chance, maybe later the morning, maybe now from now to 11 at least. So this is the hours where you can trade. Now you have a nicer profile. You mean we have a double rejection of the high now. We have prices where we saw the first time rejection on the low, which was the open range low. That means we have now more clearer range indication. We have now a volume edge that is tied to the top of the day, which means we can wait now for prices either entering this level and look for rejection for the outside to inside trading. On the other side, we can wait for prices entering this tight volume edge on the low at the 38 level and wait for rejection for the entering outside inside from the long perspective. And we still know from my high post this morning that there's also the area from the for the overnight session, which the high volume edge around the 28, 29 area for another stabilization area for a very good risk reward long as well. And we have also another hypo. This is if prices bouncing, coming back into the 22 with volume short side, pulling back to trade this short re-entering of value with a good risk reward from the 22 area down to the 12 to the volume edge. So this is all everything then really good setups that was prepared, and that's what we're waiting for. I mean, that's what I wait for. It's about my trading here, and you have to make your own plays. But I'll just show you what it makes to become consistent in trading. All right. In trading. All right. Sorry for hearing me twice. As we hit the 10 a.m. region, we see also now an increase of volume again. All right. So that means that maybe some guys who traded the open and see that the trend didn't work out, now a little bit thinning volume, drying out volume in the market, and now maybe some more traders coming in and increasing a little bit the volume. Alright, we'll wait for the prices. We're waiting for the prices to coming up to this volume edge, to the 49 area, and then we want to see a rejection. Right now some buying is going on, just some short-term trading into the range high. Everything okay. Alright then, we wait now for the rejection signs, because there are only two things can happen. People trying to push people in the long, and then fishing liquidation the stop and going into the short. Obviously real strength means that they real want to fight for the long. Both is possible, always, of course. Right now more the range is possible, but we want to see the rejection sign. And you have to find out how it looks like and find to spot them, to know if it's good to go for the short or not. So I got stopped out with my first short actually after they pulling for liquidity, fishing for liquidity, which you can see here. I entered after this first rejection. You can also see that then in footprint. I entered here with the second rejection and with the top area, and then they again maybe not found enough liquidity for their short, and they pushed another time. And this time, the first time they only hit the 52 level, and then again even pushed it a little bit higher to the 53. But what you see then was that there was a quick rejection here from the high. That means quick selling, 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 selling. That made me to enter this position again, but only within this top area, which I got then the cheap price at the 50. I would not recommend to enter now at the 48, 47, because then you would be too far away from the high. This is very important. They're not getting emotional and jumping behind or after the price. And the target now of this trade is the 43 at least, because this is the at the moment POC, and also if you trade maybe with 2 contracts or more, then you can see your next target, the whole value, sorry, I'll show it here, the whole value then to the other side at the 38 region. But first target now is the POC at the 43. Yeah. And the funny thing is that one really needs to be clear-minded at this moment, because then if you're not clear-minded, you always have to be honest to yourself. And what I feel sometimes is that this kind of revenge trading, because I got stopped, this was earlier or years when I started, and even a month ago, a lot of months ago, then this can be some revenge trading, because you cannot filter anymore, and you're not clear-minded, and then you say, I got stopped out, now I have to have some ticks because this was a loser trade, and that's very dangerous then, because then you get into some cycle of pain-driven emotional trades. Ask yourself if you had those kind of trades, if you have observed some kind of negative emotion-driven trades with your own trading. I stayed objective. That means I stayed in the trigger-based prepared strategy in place. And this was then the rejection moment in the delta, which we saw here. Take a closer look at this candle. Do you see this here? Liquidity fishing. They fished the stop. Me too. I got stopped out. But then I said this. Rejection. That means they just fishing for liquidity. And one could get then a cheaper entry as seeing this. But you have to be quick. And that's the problem. If you're in the revenge mode and don't have your feelings under control, you cannot be then in control of your trading. And then you're gonna make some failure decision as you're trading based on your emotions. Here you see it again in the footprint, the rejection candle here, the fishing of liquidity, which they also got me. And then I saw, okay, there's a second chance to get into this short again with a good risk reward, then because we at least have here 6-7 ticks chance from a cheap price to the 43 to the POC at them. I still give market the time then to reach my target area here at the 43, because that's the POC, remembering that's the minimum target I need to have for a good risk reward. And if market can't do this, then so what? That means just that market is so weak today that prices don't even reach the minimum areas. And what would be the result then? Well, then my stop now is at the entry level, that means at the 50, and then I get stopped out with on scratch at zero ticks with this trade. But I have to risk this because it doesn't make sense to take the winner too early than what you have measured for your risk reward. And if it happens, then it is the way. A little bit unfortunately for the trading aspect today, but if market is so weak and can't even make the other side, then that's the way it is. Then it's just a weak market. And if this happens now, then I will stop trading for today, because a market that doesn't give me the minimum reward is no market to trade with your system. And then you have to accept this. And now we're already at the 50 level almost. Now I got stopped out, means looks like this here. My target area was the 43. It wasn't reached by one tick, okay, that's it. And now I will quit my trading for today. With 3 good trades, 3 lucrative trades, the possible long trend. We see here a lucrative trade in terms of the short, but they're fishing for liquidity. My stop was at my 4 tick accepted area with 1 tick above the high. Normally I try to get in with 2 ticks above the high, would be then at the 54 level, but I thought that's okay because this wasn't the super very cheapest, but still a cheap entry. Then I see the signs of rejection and got in the second time because of this with a clear mindset, and my target then wasn't reached. Means that the Bund now tighten up, so only making a 5 to 7 tick range right now. And this is one of the days where you just have to say then, well, market doesn't pay me, and you know, then your trades were good or lousy, were lucrative or lousy. In my case, this were 3 lucrative trades, and they just didn't play out. But I didn't lose much money because I risked with per contract then 4 ticks. In this case, I got a 3 ticks. As this trade already run in my direction, I was able to pull the trick with my adaptive stop handling management to 3. That means only 3 here, then 4 here, and 0 here, means with the 3 trades per contract 7 ticks. And I'm allowed 10 ticks minus per contract a day, but I'm not gonna force this today, because this is the 3rd trade in a row without a lucrative trade in a row without positive ticks. And number 2, the market tightened so up after tick trade number 2 and 3 that I'm not now forcing anything. Market is not delivering in terms of my allowed risk reward. So what? That's okay. You're gonna see me now clicking here to lock. That means my trading now is locked, and I'm not gonna spend more in this minutes of very low liquidity. No matter what market now is doing, you have to go then with acceptance program on your mindset, because now if market maybe later or whenever is gonna move very nice big swings or whatever, this doesn't matter. You have to find then also acceptance. You made this rationally from this decision, from this ongoing market, and if it changes, then okay, but I'm not gonna risk in this kind of market mood. So if you're a trader trading the full time, you then can make a decision after you're like me today and coming back maybe then in the afternoon and say, okay, in the afternoon, let's see if there are some impacts from the US markets or anything, and then go for a second session. That's totally okay. Absolutely. Yeah, I will be live anyway till 11 a.m. if I see something interesting. If you have some question, then you can write me, of course. Now I'm gonna do my analysis of my trades of today and also my psychological journal, which makes me better every day. Hear you later. We'll be here till 11 a.m. Central European Summer. Yeah, now see that. Do you see how the range tightens up more and more? Now they only made it back to this volume edge around here, 44, 45 area. Means that they still buying on the VWAP. Means some big guy is still interested always in buying here and here now. Here it was still the rangy character. And again, then they couldn't make even go back to the POC. The POC a little bit shifting, getting into a little bit more P-shaped. That means that the buyers first till here and here, and then one can see here that it changed. That it changed starting here. The shorts that were taken in, and here starting buying then again, and it's tighten up. That means it's some slow passive buying here from some bigger trader. And yeah, that means not really good, as we see in this situation that we didn't make the low anymore. Now one sees, and it's really not good to take on here on the short side again, because the range tightens up. It doesn't reach anymore the 42, 43 area, but it now 2 times stopped here around the 45 at the VWAP. And then you have to think of what, if you're still in trading, not like me who stopped trading with 3 lucrative trades that didn't work out, which then might signal with the tighten up of the range to stop trading. If you haven't taken trade so far, I wouldn't go here for the short anymore. But the question is, if it's everything so tight, makes it sense from the risk reward to go in here now for the long? For me, no. Absolutely not. Because this is the middle of the 2 days range, and we have, if you want, if you like it or not, even it's a little bit in a long trendish behavior, it's still a shifted range market. So nobody wanna trade here the long at the POC. Nobody. Here you see it, that's at the moment POC at the 47 level. Now they got back to the 43. Now they tested the 43. And then there's still this lower range from the open phase. There's still this lower region of 38. So the real good entry areas is at still, like in the morning, is at the 38 level. And also around the 28, 29 level from the overnight session, because this is the last area above yesterday value area high. So if you're still in a trading mode, I will wait for prices to test at least this area here. Then you have a wonderful risk reward for the range long. If you see really rejection and not a short trendish behavior before reaching this area, of course. Yeah, have a look into the trading screen. See that? So it just makes no sense. It's tightened up. It's so tight now. It only it as it went now to the 43. Now they don't even test it with the first test higher than this main volume edge. That means right now we see just objectively from the volume profile perspective, we see only a range from around 45 to 49. That's so piggy little micro thinking. And if you want, then maybe from the 44, yeah, but this haven't been traded even. Let's take a look at the footprint to watch this very moment. Okay, look, 43 again didn't got even traded. There are only 11 contracts got sold into the bid. That means the probability of one who sits at the 43 and waiting to get filled was, I don't know, maybe not even 10% measured in terms of the order book size, which is right now about 300 contracts on each position in common. This isn't enough to get be filled then with a limit of your position. So it's just around 44 to 49, 4 to 5 ticks, and that's not enough. This is just not enough. So don't waste your time if you're not a super micro scalper, but then you're not, maybe then you're wrong anyway, because the Bund is not a super scalping market. This is more the liquid market. We look for some, at least some normal scalping to intraday swings. That's at least what I'm doing. And look again. So what you doing here with this mess? You may entered here. You see that they can't go lower. Then they go up again. Then you maybe got stopped out without a good play parameters. Now you're thinking of, hey, should I go into the short again? Maybe you get in. Now you're getting maybe nervous at the 49. And maybe you look now for 44 again. Then you recognize, wow, 44, 45, that's only 3 ticks. So you see, your risk reward is really bad. That's not good to trade here. Just leave it. Yeah, okay. Let's see here. I mean, this is enough tighten up for you here, this region? I think yes. So you see, that was a good decision. It was just a good decision. Sometimes it may find more volatility and more volume and will trade wonderful, and then it's still a good decision to end trading when you made this decision. This time it's just obvious that the trading to end trading here was good, as the signs could be seen here that the lower volume edge wasn't reached anymore and everything tightens up more and more and more. First here, then here, now only here and here. So we went from a 53 to 44 to 46 to 51, and this is the area where we now a little bit where we wedge, and at least for the last half hour. Now you see people, a lot of pressure now selling, a lot of pressure. The highest amount been selling at a glance for the day so far, but you see still having trouble because people are buying. This is a very passive way for buyers to get into position. I can repeat it again and again. You see that delta, when deltas have no impact in price, this is some imbalance and some divergence. And in this today it was just again and again, when people coming to this region, then big buying appeared, and at this moment when they sell into it, you see that this was absorbed. And again, here now, you see it very obvious, they can't go lower, they can't go lower, they cannot go lower, they cannot go lower again, and now they absorb really big pieces. I mean, they have sold more than 2,000 contracts starting here, and this all got absorbed. Means as long as the absorption continues, and you see that there was this absorption behavior starting already in the morning, then you can sit in your short here, but you will have trouble because the range is so tight as of absorption. It's 11 now. I say thank you for watching again. This is Anton Höpfel for Monopoly Trading. And again, we are still for free. This will not be for free forever, because cognitive resources of my brain are first, of course, reserved for my own trading. And as you may imagine, I'm first a trader and then some guy who shares his appearance with a goal number one, to avoid maybe newbies and retailers to losing a lot of money because they caught into this trading entertainment traders, gurus from YouTube that tell her in which direction price goes, and think, wow, I can make a living out of it and it's going quick and fast. I will just show you this is not true. Then I may avoid this. And the other thing, of course, is to show you, if you're a more advanced trader already, what it is all about to become consistent, and what you have to think when trading, and how you make your market big picture preparation. That's the second thing, from the schooling, from the technical side, from the teaching side. But first all, I'm a trader, and so of course then this will not be for free all the time, but we're still in our launch mode from our website, and so we decided to just make it accessible for free for everybody. Later, as I said, that I'm a trader and I need, of course, my resources, so I want to get paid then, of course, for sharing this information, as this is extra time I have to spend day in and day out to make this additionally to my trading. So I don't have to do this, of course, and that's also some something that then will change. I don't know when, but we will see the next month. It will definitely change. Then we make not this, can't do this for free like everyday live session, which is obviously a cognitive resources needs and also some time to make this preparation and all that stuff. So anyway, I thank you for listening and watching. This is Anton Hopfel for Manapa. You see later my recap. I will also share it then on Twitter. Bye bye.